going? We're live?
Yeah, you guys start.
Oh, okay.
No.
I was like, get it rolling, so then
So we made it through January. We're in the beginning of February, and I've finally found a chance for the two of us to sit down.
Yeah.
This is Atif Ahmad with the Dello Mortgage.
Thank you.
And a good friend of mine for over a decade. We've done a lot of business together.
Appreciate it.
And one of the smartest guys I know when it comes to mortgages.
Appreciate it. I think the same. And I'm honored and excited to kind of chat. We'll try to keep this up and do it every quarter for sure. And we'll appreciate the invite. Looking forward to the conversation.
Yeah, likewise. Thanks so much.
Yeah.
Atif,
yes.
good to see you.
Wade, good to see you, bud.
Happy 2025.
2025.
I mean, I talked to you on the phone all the time.
It's already February. We've kind of blown through it like that.
And we were already having 80-degree days. This is wild. So, I mean,
nuts.
Hopefully that doesn't mean a warm summer. So what are you seeing? We're a month into 2025. What are you seeing?
It's been bonkers, right? So I feel like I've been putting in like 10 to 11 hour, 12-hour days for the last 10 or 15 days in a row. It's been, it's the normal pop that you always get, like coming right out of every January. Like if I go back and look at my data, the trailing 2 or 3 years, every January is the uplift, right? People taking it easy during the holidays, and then you get back into the swing of things. And this year, with Christmas and New Year's falling like right in the middle of the week, like nothing turned on until like the 8th. I felt like the 7th or 8th, and so as soon as that turned on, it just like we've been pretty busy with new leads and new lead intakes. And so our applications are up about 18%.
Great.
In January, which is a nice sign.
Nationally, I think they're up like 2.2%.
Yeah.
So that's great to hear.
I think everyone, it seems that's the case. I go back and look at my data, and like last 2 years out of the gates in January, February slowed down, March slowed down. But if you go back and think about the last 2 years too, there was still a lot of monetary policy, like concerns and changes, and rates, Fed deciding on whether they were going up or down with rates. And so you saw rates spike a lot earlier in the year. And so, it kind of led to a lot of that. This year, I don't see a lot of change happening on the monetary policy side of things, right? And so it's too early to tell right now, early in February like this, but hopefully we don't have a pullback, right? And things stay kind of level. I mean, rates have been holding, and so, so far it's been busy. If we can keep the momentum going the rest of this month, and we don't have a pullback in the number of apps coming in or the leads coming in, that will be a really positive sign, right? I mean, we still have all the other existential stuff going on with the new administration, but so far, that's what it's been looking like, right? And we are, I think, I don't know, you tell me what you're seeing, but I mean, are you seeing the same kind of level of
similarly
activity?
I mean, I'm working 12, 15-hour days myself. And a lot of it is, it's not all like income producing work. It's generating, it's building, getting clients ready, getting them pre-approved and ready to hit the market. Also previewing a ton of properties as well as everything else. But
so like, what's it been like for you?
No, I mean, we're busy. We're really, really busy. And I think we're building towards a strong spring. There's a lot of inventory on the market right now. Buyers have a lot to choose from. And I think what we're seeing now is that people have accepted the fact that we're probably not going to be seeing a huge monumental shift in rates anytime soon. And so the people that are buying more out of necessity. I think right now they're having that second child, or they're relocating, or whatever those reasons are. And that's really driving the impetus. And then some people are like, you know what? I can withstand these rates for a little while. But right now I'm able to get that home in that neighborhood or in that part of town that I was not even a contender for 3 years ago.
For sure.
So let me go ahead and make that move. I've got some equity in my home. It's not what it would have been, 3 years ago, but it's good enough.
There's no doubt. I've been seeing a lot of, like, the other thing I've been noticing, and I don't know if you've been seeing the same thing, but I've noticed that like the pricing's been better, right?
Yes.
I feel like last year, maybe even the year before for sure, like stuff that would be coming on this time of year normally, they were still priced a little high. And maybe that was because the foreshadowing or thinking that, the market will get better. And I don't think there's much room for that right now, right? I mean, I think everything that's coming on the market, at least from what I can see of my clients going under contract on, is just priced right. Like they're just
right.
There's not like, hey, we can price a little high. I don't know. I mean, is that strategy is not on y'all's end? Like, I mean, you're pricing to comps and you're pricing price right. Get this thing moved.
Exactly. Because, if you don't price it well from the jump, then by the time you are priced well, you've got 100 plus days on market. You've missed all of your momentum, all of your window, and you're probably going to end up at that number that I told you to start with or lower because of time. And sitting and becoming stale. And so it's a really, really fine line right now. The sellers still want to try. They still, they still are having a hard time, in my opinion, digesting the information. Now, whether or not the agent can get them there is a different story. But I mean, I was running comps with some clients this morning about a listing, and we were looking at several comps in Bolden, and there was one in particular that sold for $100,000 more, under contract in 4 days versus everything else that had 70, 80 days on market, had taken several price cuts, and certainly closed for less than the last list price. And so it showed me that if you do price really, really well and you know where you are, there is momentum. And we are seeing some multiple offers. I mean, that has started happening in the last couple of weeks. I feel like post-election, we had a pop. We closed a good, we ended up having a really strong Q4. And most of that went under contract post-election. Then it softened over the holidays. Like you said, we had Christmas and New Year's both in the middle of the week, which kind of, quieted everything down for a little while. And now we're right back at it. But and so it's really hard to guide your clients right now because in some areas of town, I'm like, we can probably go way less because there's a ton of inventory, and a lot of comps. And then in other things, it's like, I know I told you we could go in significantly less than the asking on this property, but on this one, I'm going to need you to go over. And you're like, what? Yeah.
I mean, like contracts that I'm getting, right? I'm still seeing the stuff that's even priced right is contracting from what I can see. My sample size is still coming in at list or below list, right? And there are the few cases where it's priced really right, and there are multiple offers on it, even up at that 1.5, 2.5 range in that kind of territory, right? Otherwise, for the most part, I feel like it's been, I don't know, seems like somewhere between 8 and 10% on the bigger price stuff. Stuff that's a little lower price from what we can see, right? But certainly, the good properties that are priced right are moving really quickly. And I think you're right that the consumer is probably feeling more confident that we probably won't spike back up to 7.5 or 8% on rates. And maybe, we stay in this territory and maybe just either stay here or gradually go lower. And so maybe that's all adding to it, for sure. So, we'll see. I just, hopefully, it's trying to predict this stuff is so difficult because you've got so many factors in here, right? And like I mentioned before, that the monetary side of things is a little bit more calm. And basically we got the Fed just on pause, right? The Fed's not going to raise rates. They're not necessarily cutting rates. I think we started in September before the election with the plan or with the modeling that the Fed might cut 4 to 5 times this year in 2025. And by the time we get to January, that's modeling's gone down to like 1 cut, maybe 2 cuts, right? And
which is exactly what happened in 23 and in 24, for sure 24. I mean,
wait and see, right? And in 23 for sure, that I think there was still this concern of maybe still hiking, right? And 24 early on, maybe still the same case. But once they started their cut cycle in September of 2024, we knew we were out of that territory, and now it's just a question of the pace at which they do cut. And so that's in question now, right? So I think that part of the equation, like if you look at all the things that go into this like all the factors, like I feel like that part of it is a little bit more known and stable. So now we're just dealing with kind of the new administration, all the fiscal policy that has to deal with.
Right.
And then, you know, everyone's, you know, you look at the headlines, right? Tariffs, immigration, all these other things, and, you know, what that impact's going to be on the market. And it's a little early to be known what the deal is, right? And so I think that, like right now, like I've got modeled in for my business that, you know, rates stay in this kind of territory where we're at right now, which is basically in the high sixes, right, butting up against 7%. Most likely probably for the next 2 or 3 months until we get the next round of data, and also, you know, whatever with the, you know, the fiscal policy stuff. And then see how this stuff shakes out, right? What's interesting is that the new administration is focused on, like, you know, lowering oil and gas costs, lowering tax burden, getting rid of regulation, which would stir corporate, you know, growth and bring back manufacturing. And then that propels the economy, right?
Right.
And keeps inflation down from that standpoint versus, you know, the prior. And so will it work is the question, right? So I don't know. So it's interesting. But I think at the end of the day, if we can just keep things stable for a minute, because we haven't had that in 2 years.
Right.
It's been this yo-yo. If you look at the bond market and the bond charts and the 30-year, the 10-year treasury and or mortgage-backed securities, I mean, it's been like up and down all year long, right? And
data has shown that prospective home buyers, it takes people 90 days to adjust to a rate change. 90 days for them to like wrap their heads around it. And if it's constantly fluctuating, people are paralyzed to make a decision.
And it's no different than your business and my business. Like if we want to grow and we want to hire another person, or if we want to do something different, I mean, like we need to know so that I could plan, right? And so it's the same thing. And I think households are doing the same thing. And so, you know, hopefully we can hold and people just keep building momentum. And you know, I still am in the camp, and I still believe that mortgage rates will be lower. You know, they'll be lower by the end of the year, maybe not significantly, and they will be lower next year, right? And so I think that's still my data. That's still what I'm talking about with clients. You know, I don't know how deep of conversations you have to get into with clients about that part of the equation, I guess, right? I mean, I guess the question all clients are asking us is like, you know, are you having more discussions or less discussions about prices continuing to drop?
It's definitely something that we've had conversations about with several sellers. I don't think at this point that anyone is convinced that they're going to drop much more than where they've gone. And if you look at, you know, just ABOR's stats, like average pricing went up in January. And so like we're trending upward. We're also getting more inventory. But I like to think that we've kind of gone through most of this and that we're starting to kind of And I think that's what we're seeing in consumers as well.
Yeah. I'll ask you this, like, you know, you think about, you know, both you and I kind of spend a lot of time in Austin proper, central Austin, kind of whatever, right? And like, you know, I have clients buying in central Austin in the last 3 or 4. I mean, like amazing, like the prices that they're being able to get these houses. When I think about, you know, I've been in Austin 30 years and in central Austin for a long time. You know, where do you see value? Like, where do you see, like, do you see like right now, like opportunities?
Oh my gosh. There are so many of them. I mean, I think that in general, you could throw a dart at a poster board of Austin's map and in, you know, 5 years, you're going to be really glad that you made that purchase.
Exactly.
I mean, look at anyone, you know, who purchased in the spring of 2009, you know, or Q4 of 2008. You ask them today, are they happy if they still have their house? They're very happy.
Yeah, for sure. So, I mean, like I was telling someone last week that like I've been in Austin 30 years. I've been in the mortgage business 20. I was a real estate appraiser before that. And I think I can only count on one hand the number of times where the market was really soft.
Yeah.
Right? For the most part, it's always been you're paying list or more than list. Things are going up at some kind of 2 to 5% clip. Right? There's just not been many years, like obviously 08, 09, and maybe the .com in 01 and maybe one other time, but where you're making offers,
right,
asking for concessions, asking for price reduction, going below list.
I was talking with a client about writing an offer. They bought a house with me in 21.
Yeah.
And so we're kind of going through and he's like, well, how much do you think like for option fee, like 10 grand? I'm like, no. Those days are over, you know? And so it was kind of interesting to kind of talk about the parallels in the way that we structure an offer today versus just a couple of years ago. And look, back to your question, I think Lake Austin right now has like 50 properties on the market, both publicly and privately.
Yeah.
I think there's a lot of opportunity up and down the lake right now. Barton Hills has some great homes.
Yeah.
There was a heavy new build influence in the Barton Hills area the last couple of years. And some of those builders are sitting on properties that they really need to sell.
So move. Yeah.
Mm-hmm. So there's some good opportunities there.
Yeah. Yeah. What are you working on with, I'll tell you, I'll share with you what we're back to focusing on with our team and kind of, you know, how do we have a really good 2025, right? And I was talking to my assistant before I got over here and I was like, you know, we're still fidgeting around with our marketing calendar for 2025. And, you know, we analyzed a bunch of metrics earlier in the month and beginning of January. And, you know, we've got a 1-year business plan and a 3-year business plan. But, you know, there's still things we're fidgeting with, you know, but, you know, are you like, you know, if over the next 6 months, basically kind of what are the couple of things that you think like
that we're focusing on,
that you're focusing on either with your clients or your team or whatever. And, you know, I'll kind of.
Yeah. Well, I think like first and foremost, like loving and nurturing your database has been something that we've now have built in more time for. I mean, there was a point where it was just, you know, drinking out of a fire hose. And now that we're able to get into a little bit more of a cadence, we're, you know, back to marketing calendars. We've got our big crawfish boil coming up in a couple months. And so we've got, so just again, reconnecting with these people, sharing with them what's going on in the market. Yeah. They have questions. So just being a resource. Yeah. And such a huge portion of our business comes from referrals. So, so that's been really good. And then also like even on listing prep, we're taking things to a much greater extent with a lot of our listings. Yeah. What's become, you know, becomes more and more clear and back to opportunity is a lot of people right now don't want to do any work. Yeah. And with the levels of inventory, they don't need to. Yeah. They can find something that's move-in ready. Now, there might be several other offers on it. There was a house in Zilker just the other day. It had 8 offers on it. Yeah. You know, at $1.2 million. But it was cute as a button. It was ready to go. Yeah. And so there are tremendous opportunities for those buyers that have the bandwidth and the gumption to take on and hire a great contractor. There's several great contractors out right now to do that bathroom remodel, to finish up that kitchen or whatever. Because there's just tremendous opportunity there. Yeah. And I think when they go to sell that home a few years down the road, 5 years down the road, they're going to be really happy they did that. Yeah.
Yeah. I mean, I think you got to be patient and, you know, I don't know what's the best word for it, but, you know, patient, but aggressive, I guess. Right. You know, you got to be, keep looking, and also be kind of patient, but ready to go for sure. I mean, I think on our end of the equation too, I think to your point, right, back to some basics, right? I mean, I think what's super important right now is lead follow up and, you know, having to do that where our normal cadence might be X, like doing it 2 and 3 times that same amount just to make sure people are being communicated to and followed up with. And so that's super important. And our conversion ratios are super important. And then also to, you said, back to basics to just reconnect and make sure you're reconnecting on a regular routine basis, week in, week out, right? And one of the challenges I've had, and I don't know if you deal with this too or not, but like I've had to go back and re-time block my entire calendar
Oh my
to figure out
gosh.
how do I get this thing right, because I got multiple people on my team that are like kind of constantly pulling at me for something,
Yep.
and it's so easy to get off that track, and what ends up happening is that you lose sight or momentum on the prospecting stuff, is the things that are like really important to keep the engine running, and the tendencies to do this. So like that's been a big focus, is blocking time to make sure that those things get done and not interrupted, and then reconnecting with our clients and doing all the prospecting things that we tend to sometimes throw to the side, especially when you get really busy, right? Like you get a bunch of leads coming in and you're trying to get people, for us, pre-approved, and for you kind of get either, buyer's agreements put together, listing agreements put together, and all of those things. And then like you're, oh, I was supposed to make 10 calls to like my 5 favorite people or 10 favorite people, and I haven't done that. And so that's been a challenge, but we're heavily conscientious on that stuff, and it'll be interesting. We'll have to get together again and talk a little bit more about like, what's working and what's not working for sure.
For sure. But I think right now people they want our guidance. They want to hear what's going on. Yeah. And they want us to be honest with them.
Yeah.
And right now, with some of my sellers that bought just a couple of years ago, I'm like, you are going to take a big loss on this house if you want to sell. Yeah. So this is the reality. Yeah. What do you want to do? I can't, your house is beautiful, but there's a lot of data that shows that this is kind of the range where it should be. Yeah. And that's a hard thing for people to swallow. So a lot of it's like planting seeds even as well. Like, let's stay in touch. Yeah. Now it's not the right time. Yeah. Or you know what? We're moving anyway. Yeah. We gotta go.
But like you've got a team, right? Mm-hmm. And you've got people helping you on your own team and managing things. And I don't know if you noticed this, like for me, like we're busy right now. And I've got 4 people on my team that support me. And clients need so much touch right now because the stuff that's moving good and fast is moving really fast. That's and correct. You have to do a ton of communication. And if you're getting your house's stuff ready to list, you need all this support to get this stuff done. And I think our industry has also been, at least on our side of the equation, we'll lose another 23% of mortgage brokers here or mortgage loan officers in the country this year, probably. We've lost some last year. And so,
I think this market is definitely, cutting the, it's definitely putting a harsh line in like the tenured full-time professionals.
Yeah, the pros like you and your team versus like the guys that are just,
right,
doing it either part-time or don't have any kind of support. Or
the days of people getting the real estate license because they've watched a reality show that shows people negotiating a $10 million contract over a glass of wine. Just is not reality.
Yeah. It's a lot harder than they think, right? Yeah. It's crazy.
What are the biggest misconceptions that buyers and sellers have about the 2025 market?
I'm not having as many discussions about like, as much of the sensitivity around interest rates and things like that, right? So that isn't there. I do feel like a lot of people feel like prices are more stable and at good values. And so that's not like a real hot topic I'm talking about either. I think the biggest misconception I see buyers have is that it's very difficult still, right? Meaning that the underwriting's harder than it's ever been, right? People's debt ratios are still generally high because interest rates are higher. Fannie and Freddie, basically, in all secondary banks, basically, they're still operating in a very, scrutinous way, and underwriting is complicated and challenging. And so in this world where you can get access to a pre-approval letter by just going to any internet bank's website and putting in whatever you want and getting that information right away and saying, okay, I'm good to go. Every client that I've gotten as a rescue deal that has been working with one of those types of banks has been misanalyzed. dramatically, which would not have gone through in other cases. So
sing it from the rooftops.
Yeah.
Your online mortgage companies are not worth the time.
It's really difficult. And I think like I think it's more just that, hey, you need a professional on your corner to get through this deal. That is an emotional transaction, whether it's your first house or your fifth house, it's always emotional.
Right.
And you need really good people in your corner to help manage that whole process for you, whether it's on your side of the equation and my side of the equation, because it's a team effort.
That's right.
That is critical. And I don't think that is taken for granted, I think, a lot. Mm-hmm. And just the kind of minutia. So it's super important to be buttoned up and talk to someone that really knows what they're doing, right off the bat, especially on the finance side. And I would probably say equally as much on your side of the equation, because you have to navigate a lot. And when you have houses priced, I think, at good, fair values, right? And people want to move their stuff and they're getting under contract in a shorter period of time, right? The closing times are compressed in the sense that we're not, there's been a couple of deals in the last month where like I've been getting calls, can we close this in 20 days? And it's like, yes, we can close it in 20 days. We just can't get hung up in the option period, right?
Right.
Or the normal 30 days even, right? It's just, it wasn't like a year ago or a year and a half ago where like
you can make it work.
We got a lot of time, right? Or we've got a lot of flexibility and so forth. And I think that starts dissipating when prices get down and there's more activity and the inventory starts slowly climbing down. Mm-hmm. We're not going to go back to where it was like in 2020, 2021. But I think just being buttoned up, working with true professionals,
you still got to be ready to go.
You got to be ready to go. Interest rates are super important. I'm not discounting interest rates. Every little bit helps. But, what's more important is securing a really good house at a really good price. And we can always come back and refinance it when rates do climb down, whether it's a year and a half from now or 2 years from now. We cannot come back and get you that house in Terrytown for 1.5.
Exactly.
Exactly. That thing's going to be 1.7, 1.8, maybe 2. Right. And so I think that's kind of where it is. And frankly, the best of the best are going to be busy, right? Mm-hmm. We're busy, you're busy. Do
you think, what is the number? Mm-hmm. What is the interest rate?
Yeah.
Where like everyone's out buying a house?
Yeah. I mean, look, when it drops right now, we're kind of in the high sixes, right? For the most part, certainly anything that's conforming loan, like 806 or below. The jumbo stuff, at least on my end of the equation, we've got some awesome jumbo product that's like 5-year arms, 7-year arms that are in the low sixes. But the 30-year fixed stuff is kind of running, high sixes, low sevens, depending on the credit profile. It's really sensitive to interest rate, obviously. If you see rates drop to 6.5 below, that opens another huge chunk of buyers, right? And movement. And then certainly as you approach 6 and 6, same kind of thing, right? So what is like no hold bars, everyone's like out there going crazy. I mean, I don't think you're going to see them drop that quick, first of all, but I think if you get, sub 6.5, it's going to feel very different. And certainly if you approach 6, I think it opens up another, probably more so even on the lower end of the spectrum.
Right.
So it's just kind of finding that time, right? It's impossible to time this thing right? It's like buying a stock. You're never going to buy it at the absolute dip unless you're buying it every single day.
Right.
You're typically either buying it on the way down or most of the time you're buying it on the way up.
Correct.
And so by the time you realize that prices are starting to adjust and like we're seeing a little bit more up,
the consumer forgets that the information that they're reading online is typically a month
lagged,
at least
lagged
easy. And so, what's going on, boots on the ground. I mean, I was at a meeting with about 50 agents this morning.
Yeah.
And the general sentiment of the room is like, people are busy. People are looking at stuff. And I'll tell you, even on the what's also been really interesting is like the ultra luxury in Austin, which I'll say like north of 7 million.
Yeah.
Typically that market is fairly busy right now.
Yeah.
I mean, there are things, they're not on MLS, they're not on Zillow.
Yeah.
These are private listings.
Yeah.
And they're trading.
Yeah.
And we're showing them.
Yeah.
So
Yeah.
for a while it was a little quiet, but
Yeah.
that activity is picking back up.
Yeah.
Now, those people aren't typically getting a loan.
Of course.
Right now.
Yeah.
But it's interesting to see, and speaking with some of my clients that are looking in that price point and pretty actively searching.
Yeah.
They took out money from the stock market. They said they had a great run and they pulled out, a month or two ago or now, and they're reallocating that into a depressed real estate market.
Yeah, for sure. Yeah, I mean, there's no doubt, right? I mean, the stock market's been ripping and it's been really good, and so that's been definitely helping, right? For sure. And there's been a lot of capital on the sidelines for the last couple of years. I mean, our money markets, like if you look at the overall, size of the money market funds out there, I mean, like there's massive amount of capital on the sideline. People just either saving and waiting and so forth. So I agree with you. I think we'll see how it happens. And I don't know. I'm optimistic. I'm thinking like I've built my model this year, and I know you and I have not talked about it, but like, we're planning for a 20% growth in our business this year. We're obviously coming off lows, but we're planning for that. That's what we're thinking, right?
Great.
And so, you start, if you can keep some consistency, you're thinking about, like how do I layer on some more staff or readjust my staff, or what this process is and all the other things that need to go along in running the thing. So I think, I'm optimistic for sure.
Yeah, I was at another meeting last week, and a representative from a data company was saying that Austin's real estate market should increase by about 14%.
Yeah.
So we should be on average, 14% busier, 14% more sales. So on and so forth.
Yeah.
So
I mean, I don't know. I mean, like people ask me all the time, right? I mean, Austin's still small, man. And it's like, I still feel like, I don't know. There's no other city that you could go downtown on a Wednesday,
right?
And there's activity happening, right? Whether
There's
people are eating at dinner or something in the heart of the city, more or less, right? Versus most downtowns are ghost towns, during the week after 5 o'clock, right? So I don't know.
It's a pretty vibrant city for sure. Yeah, I don't think Austin's going anywhere.
Yeah,
I mean, we are still a very vibrant city with wonderful people, a lot of innovation, great nature, all the things. I mean, there's not a lot to not like about Austin. I think the summers get a little warm.
Yeah,
that's about it.
Yeah. I gotta ask you, how's doing real estate with a baby on board?
Well, it's been that's been.
How are you managing your time? And I know you got awesome help and an amazing husband, and so
it's been really, actually, I think in a lot of ways really good. And having her has caused me to be more disciplined.
Yeah.
So
with your time,
with my time, yeah, absolutely, and I kind of enjoy it. I used to be the person who wouldn't even start having dinner until 9 o'clock at night.
Yeah.
To now, like I'm probably in bed or close to being in bed by 9.
Yeah.
And I get up at like 5 o'clock in the morning, not because she's awake. She sleeps awesome. Actually,
that's amazing.
She's an amazing sleeper, which is great. Knock on wood. But I get up early, a couple hours before she gets up, so that I can get some stuff done.
Yeah.
Quietly, without any distractions. No one's calling me, no one's texting me. And so that's my time to try to get caught up running numbers and just that quiet time for me before the day starts. And then back to time blocking, we have a lot of that going on. And we've got, some standing meetings. So just kind of working around my calendar can be a little bit challenging, but we make it work.
Yeah. It's great. You're settling in though, right?
Yeah. And she came late spring, early summer last year. Summer was relatively quiet. So I was able to truly like get to be, focus on her. For a little while.
Yeah. The timing was good, right? Because like we just had to have a bonkers second half of the year, and
she was a welcome distraction.
Yeah. She's awesome. That's all amazing.
For sure.
Cool.
And I think Moving forward, I'm more excited about Austin's future. I think in some ways we can take advantage of this reset that we had.
Yeah.
I think it's been a really good awareness of like, hey, we're a great city, but like we need to also just, I think it's caused people to kind of step back and say, what makes us great to begin with? And let's get a little bit more back to that. We've seen people move here in the last 5 years. We've also seen a lot of people leave.
Yeah.
A lot of those same people who moved in have since, moved either back to where they came from or to another location or whatever. And I think some of the people who came and left, probably weren't the right fit for the city anyway.
Yeah. Are you seeing any, to that point? I mean, are you seeing a little bit more influx? I mean, like, I don't know, from like maybe the West Coast. I've seen a few more clients. I mean, nothing I'd probably say, hey, that's a trend or there's definitely a number, but like, it may be just the normal or, you haven't had a client specifically say, hey man, I'm done with these fires and I'm coming.
I have had a couple of clients and I'm showing a property later today to one of my listings to someone who's coming in from California. Sadly. All that to say, I've talked to several executives from that own companies based in California who have basically said, listen, Wade, we're going to be moving our headquarters to Texas. We just can't take our employees out of a sub 3% rate in a house that they've got a tremendous amount of equity in, have them sell it and then jump into, so I think there are companies and corporations that have their eye on Austin or in Texas in general that are just waiting until there's more parity in rates to make it easier on their employees.
Yeah. And I think, we also, coming out of 20 and 21, I mean, like, things got expensive here, right? And so, very expensive. So, that's probably coming a little bit more equilibrium. So we'll see what happens.
Yeah. So. And then of course, there's all the other things that we have no control over. Yeah. Right. All these external forces that, it's such an interesting time to talk about predictions because at this point, there's just a lot of unknowns.
It's just really hard. And I think that you're seeing that in the markets, right? Certainly with the Fed and I think even the financial markets, right? Like, I mean, for the most part, it's been kind of this whole week. We've had jobs data this week that's come out. We got a big BLS jobs report tomorrow coming out. And the market's been just kind of buoyed and we've had some positive and negative news and it's just been kind of holding. I think most of it is around kind of the fiscal policy stuff and how that plays out. So I think it's just going to take a little bit to figure that out. And if we can just keep things stable until that's figured out, that would be a plus, I think, for us. Well, at least in the housing sector.
So far, things have seemed to continue to be busy. So let's hope that continues.
Love it.
Okay, so my kid's not even walking yet. And you've got one out of the house and one on their way out. So how was that raising two little ones while building a business? How's that been?
Oh my God.
Any words of advice?
No one should follow me because I messed that whole thing up, right? And like all the younger people, I kind of get to mentor and honored that would even listen to me. I spent my first 5-10 years in my business blurring the line between, work and family. And it was always it's always just a mix, right? And so like we're on vacations and I'm taking phone calls and I'm like working and like it's constantly a mix between the two, right? And if I, look back, I wish I would have put some of the stuff that we're talking about together a lot about time blocking and managing a team properly and constantly working on the craft and doing getting coached professionally, which all the things that you're doing. And so how do you keep improving those things? Because you have to have that balance. And I had none of that balance for a long time. And there's times now where I still don't feel that balance, but certainly what's important, I think now, like you said, I've got a daughter now in college. I'm going to go see her tomorrow and I'm going to spend the weekend with just me and her. That's going to be really nice.
Awesome.
And my son's a sophomore. and he's driving, and so I don't see him very much. I actually got in the car with him this weekend and said, "Show me what you're driving." So it's been 3 months since I've gotten in the car with you. Let's see what it is. His car was a total disaster. I said, "You got to get this thing washed." But I think, I think about it this way, and I don't know if you kind of think about it this way at all, but like I've been trying more and more to have my days kind of thought about as red time, green time, and blue time. And red time is kind of focused in and around like just like the stuff I need to do for my business, in my business, help my team, problem solve, fix problems, whatever it might be. The green time is kind of tied to prospecting, where you're, calling clients and going to lunches and coffees and doing those things. And then the blue time is family, right? And now my days normally are like from 8 to 8. I go work out in the mornings, but I usually am in the office at 8:30, and I usually don't go home till 7. Yeah. So my family kind of, when I get home at 7,
it's done.
It's done, right? I don't open my laptop. I don't take any phone calls typically, unless it's you calling me. I'm just kidding. But I definitely don't.
And if I am, it's probably not important.
We probably missed each other 6 times earlier in the day, probably. Right? And so I kind of am trying to manage it that way, and it's been a lot better for the last couple of years. And so, if I can give you any advice, if you could, figure out how to get that right a little bit, which I didn't do. My kids grew up with me working all the time, but I didn't also have the team, and you already have a team, and I was just kind of doing it differently.
My focus has been, when we decided that we wanted to have kids, it was really like, okay, how can I build this where, I'm not the single point of contact for every single thing, because quite frankly, there are people that are far more talented, far more intelligent, and far more specialized in different parts of the transaction process than I am. And so it's really nice to have those resources.
But you've built it, right? And you focused around it, and we're constantly working on it. And you and I have a lot of conversations about, kind of team and managing a system and a process and so forth. And it's never changing. But, I think those things are really important, especially when you have a family. Especially when you have a young family, right?
Well, and what's so great is like on my team right now, we've got some single people, we've got people in relationships, we've got single moms, kids. Like it's just like we have such a diverse group, but we all have the same common goal, which is like we all want to make, by working together, our lives can improve, and be better
for sure
as a group.
That culture and that having that right culture and all of those things are like so important, right? I don't know any successful person that has not done it with a team and or a mentor, right? And you're as good as your team is,
it was interesting. I had an inquiry the other day on Instagram, a couple weeks ago, from Instagram. Someone wanted me to come and sell their home, and so in DMing back and forth, moved it to email, and I had looped in my assistant and someone else from the team, and their response was like, "Oh, I don't want to work with a team." And I just thought there wasn't a lot of weight behind just that he wanted to have one person to call. And I'm like, well, we have a team line that there's the same number, and someone will answer. But it just, we weren't going to be the right fit. I'm very, very hands-on with my clients, but at some point there are just parts of this business that I cannot devote all of my time to that someone else on the team is. And
but you also realize that the reality is that when you do have a team like you do, and you have people that are helping support you, you're doing that so that the client gets even taken care of more so, right? Because what they really want you for is the most important stuff, which is the negotiation stuff and the decision on what price
and the marketing for, and all of
and
that
your
stuff.
Network of agents and all of those things that you need to do to get the thing executed, right? And so I think you're right. People lose sight of that, and they always just want to talk to the man. Right. Of course they do, but
let me come in where I can provide the most value.
And we all have to jump in and do those things at time, but I think that is a misconception. I want to double click on one thing real quick. You mentioned you talked about the Instagram and the DM and getting a lead that way, right? And so I've been toiling more and more a little bit on there and trying to spend more time, like productive time, right? I catch myself sometimes on Instagram and I'm like literally
doom scrolling
and watching this dude's video on whatever, or jet plane. I don't know what it is for like 6 hours, like 2 hours in a row. And I'm like, oh my God, this is a waste. And I've been more and more conscientious of not wasting time on there. And so I've time blocked on my calendar, like an hour once a week to specifically just go in and DM and see what's going on from a business standpoint and like productive standpoint rather than just scrolling. But I know you've always been great at that stuff. And like, you know, where would you say like, you know, is it just a matter of the consistency and in how important is it that you're doing the, you know, in the measure of the conversion, right? Like, you know, how much engagement is happening there, which converts to the email, to the appointment, to the listing, or whatever it might be. You know, I mean, is that grown for you more so? I mean, I think every year
it has, like in the past 3 years, we've sold over $50 million from Instagram.
Wow.
In sales. We can tie like $52 million to Instagram sales.
It's amazing.
Now, do they all come from DMs? No. Some of them do.
Yeah.
But oftentimes someone will follow us or me for a couple of months. Yeah. And they're probably following some other agents. Yeah. And when they're finally ready to make that decision, they reach out. Yeah. And then my question is always like, well, how'd you find out about me? Yeah. Yeah. And oftentimes people get a little embarrassed. They're like, well, I follow you on social media. I'm like, I'm relieved. Honestly, I'm like, thank God, you know who you're getting. I don't, you know, I'm pretty much the same as I am on social media and camera than I am in person. And, and so I feel like it's nice because they have already come to the conclusion that they, you know, don't hate my guts. So
and I guess it's different for you guys because you guys have a lot of nice things to post, right? Like no one wants to see my ugly mug talking about mortgage rates, right? Or
I love your updates
or things like that. So it's a little bit different. So I guess that, you know, there's a tendency to do that. For us, like very little business. I mean, certainly the presence is important, and we're doing that. And
but you're so consistent with your Friday updates, right?
Yeah. I mean, that's like important to us. I think I'd like to do a better job with that. I'm going to take cues from you, obviously, and learn to do that. And
but I think that's great. I mean, people want to know what's going on in the market. They want to check, and it's a great resource to go back and be like, what happened last week? Cool.
I think the other thing is that you and I talk several times a week, right?
Right.
And a lot of the things that we're talking about are probably just as valuable, if not more valuable, to our clientele. Mm-hmm. We just can't always capture it, right? We're feeding each other and learning, and then kind of going from there. So I don't know. Got to do a better job with that for sure.
You're doing a good
You're
job.
all master at that. So, anyways.
Well, thank you.
Yeah.